Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Lab.com. Welcome to today's recap and look ahead. So it is Wednesday, another day down. A lot of this choppiness back and forth, as far as the indices are concerned. But, sectors are rotating and there are things to do. But the way the action is, it feels like, at any point of the day, a few different 5 or 15-minute bars could wipe out a move, like you saw in some things, this afternoon. All stocks are not created equal, and I'm just going to go through them. But first thing we'll do is we'll start with the S&P cash. S&P cash is getting very tight right ahead of Friday's jobs report. You have a descending trend line here that is intact, and we'll see what happens if it could break above it. Remember this descending trend line right here? It gave you a nice 2-day move back to highs. Okay, but that's from a lower level. Here we are now, in the same type of scenario where it's getting really tight. You could draw this from, the post-Brexit low to right here. So we are getting ready for something, okay? At this point, it feels it could be to the upside, but it's hard to cheat that way. If you want to take it step by step, here's one level that you could write down. If the bears think we're going lower, well, first thing you got to do is break below 2144. And once you do that, you remember this little upper floor here? Well, that's next. That's 2135, and then here is 2118. And if the bulls want to start getting some momentum traction, first step is 2165, and then 2175, and then here are the highs. So, even in this tight range, though, there are moves. Okay, there are things going on. If you remember last week when OPEC came out and said they were going to cut production and everyone doubted them, almost the same way when, remember, they jawboned the double bottom in the winter. I think, what was it, in February when we had the double bottom, where they just said they were going to do something and they never did it, so people were shorting it the whole time, and meanwhile, you know what happened? That was, go back here. That was back here. Remember this? Right here, looked like the market was going to implode, and then all of a sudden they talked about, doing something with oil, some grand deal when it was at below 30, and then look what happened here. So anyway, let's see if we draw this too here, how symmetrical that is. Not that symmetrical. But anyway, that was your double bottom. Remember that? That was a lot of fun. Okay, and then here was your commitment to that double bottom, and then that was your move to the upside. Same way, here was, your Brexit move lower. Okay, very similar. And then here was your commitment to that V bottom that gave you a breakout. Oh, I wish we had that back. We're here, but maybe we are over here. So we'll see. So anyway, oil did the deal, et cetera, et cetera. So what could you have seen, and how could you have at least covered your shorts and maybe nibbled long? Unfortunately, I did not go into the oil trade. Why didn't I go in? I don't know. I'll ask myself that again later. Here was your descending trend line. Here was your engulfing bar. And then here was your 8 and 21 day that we took back. And now look where we are. If you read my note, though, I give you the play-by-play. Some guys like to trade oil names. That's their bread and butter. And like, okay, Red Dog says that, for the first time in 2 years almost, the XLE has been above the 200-day moving average for 5-6 months. So I like oil names. Let me get a little bit more focused on them. Ooh, Red Dog also said that, you had a nice engulfing bar, okay, here, or an igniting bar. And what did he always say? Don't short an igniting bar, right? Because what does an igniting bar do? It could ignite another move. That's what igniting bars do. So anyway, took back the 8 and 21 day. You could have been long that day, or said, I'm going to wait to see if it could hold the top third of this. Well, it did. And now today it poked its head above this, and it's, not a headwind anymore, okay, but more of a tailwind for now. Now you'll see what happens if it gets back to here. You also had the banks. Okay, all the Fed guys are saying again, they're going to raise rates, and no one believes them. But you know what? The banks have acted pretty well. Okay, J.P. Morgan. If you take a look here, I put this in my note all the time also, saying J.P. Morgan, best in breed. Has to hold, had to hold here, which it did, and now it's breaking out a little bit above this descending channel here, so that's acting well. Morgan Stanley didn't care about the sales practice news like Wells Fargo, and now look at this at highs above the 8 and 21 day. Goldman Sachs playing a little catch up. So this is also just engulfed some moving averages from a lower end. Not leading, but at least not tailwind, not a headwind for the market right now. Boom. Okay, remember this little spot? Okay. So we'll see. Anyway, that's what's going on there. Sometimes they do get action into Fed Day. For me, what I did yesterday, which I talked about in Redler All Access, you saw in my disclosures, I bought Wells Fargo calls. Instead of, I didn't really like the trade, I'm like, you know what, if none of these stocks are giving it up, someone's going to come in for a little bit of a bounce in Wells Fargo, and it worked. Okay, broken name. I don't buy broken names. Sometimes I do options. And yesterday we talked about, I bought, I think the 44s, the 30 cents. I sold some at 60 and at 85, and they expire on Friday. Maybe we'll get a little move to here, and that'll be that oversold bounce for Wells Fargo. It's a broken name. It's been broken since breaking the 200-day right there, and now a little bit of a snapback. Talking about broken stuff, look at the GDX. We've talked about this a lot of times. If you go to Twitter, I posted a little bit of an anatomy of the trade lesson. So let's quickly go through the anatomy of the trade again. Here's your intermediate trend. Look at that. Above the 8 and 21-day, tested the 50-day, held. Above the 8 and 21-day, and then false breakout, and then this time broke the 50-day, and it also coordinated to a big trend line that broke. Gave you a move lower, a snapback. Did it reclaim the 50-day? Did it get back on the left side of this trend? No, it got rejected. Then thought maybe it could do it again. What happened? Got rejected. And now all of a sudden, less of a rally. And then you draw your little neckline here in this head and shoulders top pattern. Okay, wound up giving actually some downside follow-up. We haven't seen a head and shoulders top pattern, triggering and go in a while, and it did. Okay, but anyway, this was breaking the 8 and 21-day. Here broke the trend line. Here built the right shoulder. Rallies got less or weakened, whatever you want to say. Below the 8 and 21-day, which means you should not be long as a momentum trader, especially when it's below the 50-day, and that was your move. Some of you caught a little cute red dog reversal here today. At this point, it could be a little choppy. Maybe some people want to be a little, cover some shorts ahead of the jobs report just in case it's weaker. But anyway, that was that. So now let's get to the new issues real quick, because these new issues, even though there have been some really good ones and some have doubled and tripled, doesn't mean all of them are going to. So you have to trade them based on your process. For me, you either have something that's potentially ready to break out, break above IPO highs and go, or you have something that you're trading for a pullback. It's kind of broken, no real pattern, but it's oversold. You can get a red dog reversal for a trade, or it's wait and see. So basically ACIA, gave you a nice gap up. If you took it home long, congratulations. You bought it on the 50-day. Here's when the move started. Here's when it continued, and here's when it expanded. So we're waiting for the pricing on Thursday after the close. At this point, big gap up. If you took it into the 50-day, you got paid handsomely. If you tried playing it after the open, you had to be a surgeon. Okay. But the reason why you have to be a little careful just buying dips is because first of all, this one still is hanging in there. But again, look how the trade changed here. Broke above a prior pivot, and then once it couldn't hold this, the trade changes. No longer, buy a pullback, wait for a new high. It's got to prove that it could hold the 8 and 21-day like it's been doing, and it has. And so far, this trend is really strong. So we'll see what happens right here. Okay, but again, moves change, and at this point, we want to see, does this hold? Okay, because if it doesn't, it can go down further. With a little bit more, IPOs that have been less established, it was a good lesson to see what could happen with TTD, right? TTD, okay, we had a great trade here. Great trade. Remember, here was your post-IPO high, your second day. Okay, here it held that. We bought some here. I bought here, went home long. But then once it couldn't hold this level, I said, you know what? It's not going to hold here. Trade above this and go. So if it can't hold this, I better be careful. And I got out of it here. Okay, and then all of a sudden, here's like your 50% mark. Couldn't hold that. And then all of a sudden it broke this to the downside. So if you were playing for a breakout and you just bought more, you could have got crushed. So anyway, this was your breakout trade that changed. So if you did get out of the way today, you know what? We caught a little red dog reversal, right? From 34 down to here, went below 23.63 and gave you a little trade, and maybe it continues to here, but that's a different trade. Here you're playing for a breakout and who knows where it goes. It didn't go far. And then here you're playing for a bounce, calculated. Same way, remember that ACUI trade? Okay, this too gave you a 4-day move. Okay, pulled in $2, and remember we talked about this, red dog reversal trade, not a breakout trade, but a buy in the middle of the range. And now it's, not so sure here. It's kind of got a wedge, but you got to be careful because you don't want to see it break to the downside and fail. It can happen. Look at this APTI. This one also. Okay, this one didn't react well on the open. Okay, bounced, engulfed it, and then boom, broke the area to the downside at new lows. So these things are just not, just because it came public within the same week doesn't mean that they have the same kind of earnings power and potential as an ACIA or a TWLO. You have to be careful. That's why today, with EWBG, I was focusing on it, and I bought more in the open, and it was definitely frustrated. But I said to myself, after it couldn't move above 18, I'm like, okay, I'm going to have two stops. One, the low of the day, because once you break a low of the day, it could always go lower. You have no idea where it's going to go. My other stop would be, at yesterday's low, because if I'm playing for this thing to get above 18 and maybe break out above 1875 because of the hurricane and because the chart's in a nice wedge, it's got to hold certain levels. If it breaks them, that trades off the table. So anyway, EWBG, this is what happened. Okay, big engulfing bar. Okay, it looked good coming in a few days ago. It looked good right here, right? Looked like it was going to maybe get above this, the post-IPO high, get going, make new highs, go to 22. We could all high five. Had a nice wedge here. Okay, and then all of a sudden yesterday it tried again. Actually, no. This was the first day it tried, it couldn't go. Then it tried again, couldn't go. So what I did is I wrote down this. Okay, what was yesterday's low? Yesterday's low was, hold on, what was yesterday's low? Yesterday's low was 1674, right? If we break below 1674, maybe this wedge breaks to the downside and it's not ready to get above there. So this is what happened today. So if you go to the 5-minute chart to see the action, at lunchtime I left and I put two stops in for half at the morning low, the other half at that, and I wound up, it wound up hurting. This, by the way, I added here and then got down a little bit more comfortable. And then once it broke the morning low, because that's all you knew, right? Here's your morning low. Okay, that's your discovery. Here's your morning low. Okay, morning low was, actually, no, this is yesterday's low. The morning low was actually over here. Okay, so this was one spot. This was one spot that I lightened up a little bit, but then I was like, you know what, I'll give it to the prior day low, and then right here is when I got stopped out of the rest. So, I'm not saying if it opens up tomorrow back here, all right, it happens, but it could have been a lot worse. That all of a sudden I sold half here, the other half here, the VTF saw me get flat, a lot better than, $1.30 lower, okay? And then also now, who knows what happens tomorrow because, look at the size of this wide range red bar. That needs to be repaired. If we get a green one up tomorrow, okay, but this one probably says, hey, we might not be getting above this anytime quickly, and it could go back down and not be ready for prime time. So that's when, you have to switch gears and have to just know why you're in it. I was in it because I was trying to buy it, add to it above 18, get to all-time highs, and go. Kind of like this trade, okay, in GSUM, right? This was a new issue right here, okay. It pulled in only slightly, held right around the first day of the IPO, and then gave you a nice trade here. Okay, that's what I was looking for, okay? and didn't happen with the EVBG. Now today, what I would do if I was you, if you were in this from here and you added there, sold some strength, now I'd say give it to here. If this doesn't hold this spot, chances are it could be coming down to here. So you have to be prepared on what you want to do there. All right, so in closing, there's definitely things to do. The money's rotating. You have to be really on your toes to where it goes. It went to oil and the banks midweek last week. Tech still very selective. Price lines at new highs. Amazon's at new highs, and then all of a sudden Google, can't get out of its own way. So I was in it again today, and I'm out. Why am I out? Because you have stocks making all-time highs. This came out with a whole new products, this and that. The Dow was up 120 points, and this closed near the lows. So I have to get out. That's what I do. I could always revisit because it's stocks telling me something. Maybe it's telling me it's going to take out Twitter, not CRM. We'll see. So with all that said, hopefully you had a good week. You connecting the dots, and we have a jobs report Friday, and maybe we'll get some more continuity, or maybe we won't. We'll figure it out as we go. Have a good night.